we going to start new chapter capital gains. Am I audible, right?
Yes, sir.
Yes, sir. New chapter capital gains. Okay. In this chapter, whatever the asset we have, if we transfer that asset, the word transfer is used. It is wider in scope than sale. Okay, sale is only title gets transferred. In transfer, the ownership as well as title, everything. I mean to say the word transfer has got more wider scope than the word sale. And we have given the definition of transfer also. We have to just understand that one. For our easy understanding, we can use the word sale. Need not necessarily be sale. When it is transferred from one person to another person, if it falls under the definition of capital asset, then that capital asset is taxable. Okay. Here you will get so many sections and so many tax rate as well. In this chapter, there are special tax rates. Okay, if they ask you to calculate tax, you need to calculate according to the nature of asset and type of gain you get. This chapter starts with the charging section. 45 is the charging section. Whatever it has stated in this section, only those assets or transaction is taxable. Okay, provides that any, from here it starts, any profits or gains arising from the transfer, underline this one, of a capital asset, underline this one also. If there is any profit or gain which has resulted in the transfer of a capital asset affected during the previous year, shall only be chargeable to tax under this head. Okay. Now the question arises, the three terms. What is meant by profit or gain? What is meant by transfer? What is meant by capital asset? The entire chapter depends on these three words. Okay. Hence, okay. See, profit and gains. That means if you have a asset, you have purchased some year or some days back, assume for rupees 1 lakh, and if you are selling the same asset, you are selling at 1,50,000. What is the difference? The purchase cost or purchase price.
50,000.
This 50,000 is profit or gain. Okay, this is chargeable to tax. I mean to say in simple word, whatever the sale price minus cost, the difference will be called as profit or gain. Okay, this is the logic of profit or gain. Second one, What is meant by transfer? Section 2 clause 47 defines transfer. Transfer means sale, exchange, relinquishment of a capital asset. Second one, extinguishment of any rights therein. Third one, compulsory acquisition. Fourth one, conversion of stock in trade into capital asset or capital asset into stock in trade. Fifth one, any part performance by the person that is called as transfer. Okay, see, transfer 247. What it says, transfer includes sale, exchange, relinquishment, extinguishment of any rights, compulsory acquisition, redemption of zero coupon bonds. Compulsory acquisition means government will compulsorily acquire. If you guys have heard, while constructing the metro, so many houses or the plot of land have been acquired by the government. That is called as compulsory acquisition, for which they pay the compensation. Okay, this is the meaning of transfer. Transfer literally includes everything. Okay, it includes sale also. If you exchange one asset to another asset, that is also transfer. Relinquishment, extinguishment of any rights therein, compulsory acquisition or conversion of capital asset into stock in trade. This one, conversion of preference shares into equity shares or conversion of capital asset into stock in trade. That means you are dealing, you had so many building or plots of lands. One day you decide that I will start real estate business. Then whatever the capital asset, you bring it as stock in trade. That will be termed as transfer. Okay. Likewise, this one, where any asset is converted by the owner thereof into or is treated by him as stock in trade. The another example could be, you had investment in so many companies' shares. You decide that you will do the broking. You start the brokerage company, buying and selling of shares, not as an investment. Then it becomes a transfer. Okay, it has got the wider scope. Okay, once any of these things happened, that will be termed as transfer. Any gain on arising of transfer or affecting the transfer, will be chargeable to tax. Okay. Next comes capital asset. This is the most crucial one. Capital asset. Okay. Capital asset. It has been defined under section 247. The nature of capital asset could be short term or long term, depending on the period of holding. Immovable. It could be tangible or intangible. If all these things, if it is connected with the business or profession, that means if you are carrying any business or profession, you have any capital asset which can be movable like car, shares, gold, those things, or immovable being land or building, tangible, machinery, furniture, those things, intangible, goodwill, trademark, copyrights, those things also. Okay, or any controlling interest in any other company, that will also comes under intangible. Okay, if all these things, if it is with the business, connected with the business or not, it will be treated as capital asset. Whereas in case of an individual and HUF, the movable personal effect is not the capital asset. Movable personal effect, like your watch, your car, vehicle, furniture, which you are using it for your day-to-day life, that is not treated as capital asset. When you sell them and you realized any gain out of that, it will not be treated as capital asset. Next, securities held by foreign institutional investors. If any security is held by the FIIs, when they do the sale and any gain arising on that sale, it will always be treated as capital gain. Though they have kept the securities as stock in trade, in spite of that, it will be treated as capital gain. Why? Because it has been specifically included here. Specific law or the provision overrides the generic law. Okay. Next, capital asset includes any rights of management. I told you, if you have invested in any company, controlling interest you have, that is also treated as capital asset. Any jewelry, that is also capital asset. Drawings, paintings, sculptures, work of art is also capital asset. Archaeological collections, this is also capital asset, but it excludes from the definition of capital asset. Stock in trade, it excludes. Why? Because it will be treated as sale under PGBP. When the sale happens of the stock in trade, that will be taxable under the head PGBP. Hence, it has been excluded in capital gains. Personal effects of movable in nature. Movable personal effects.